I do want to take a talk about Full Fans, Vihan, and Panic Buyer all talking about their portfolio results today. And I decided to look. I haven't looked at my portfolio today, and I looked at my portfolio, and I was down about 0.3% or so, somewhere around there. Um, Looking on the Wall Street Journal's main page just to see where kind of the big indices finished up. And it was one of those weird days where the market surged and then just kind of that last hour, guys, I'll tell you, just gave it all up. Gave it all up. The S&P 500 actually finished the day down a little bit. Dow was about break even, and Nasdaq. So techs, anybody that's real tech heavy, took a beating. The Nasdaq was down about 1.25%. So let's take a little mindset break. I think that'd be really good. There's two questions in here, or two comments in here. Let's see here. So Vihan says his portfolio was down 6% today. Talking about how does mindset how mindset has to pay today, right? This is really important. So I'd like for Saul to talk about mindset. And then Full Fans was also talking about whether days like today are considered thinking about buying opportunities. So let's start with that first part, the mindset. So I want to share this. I think it's really important. It's, anybody that's real tech heavy, or maybe you've joined one of the newer portfolios that has a lot of high growth stuff in it, and you just have a bad day like this, right? It's still pretty concentrated, and you just take a beating. This is where you have to remember your goals, right? This is the thing that helps me the most, is not just remembering what my goals are, but when are my goals? My biggest financial goal is retirement, obviously, right? That's still give or take, obviously, depending on financial success and other things, probably 20 years away, right? 20 years away. And again, I am a net contributor. I am putting new money into my account on a regular basis, and I am buying on a regular basis. Makes it easier for me to look past days like this, because I lost real money today. I did. And those of you that your portfolios are down, you lost money today. Your portfolio went down, you lost money. The good thing is it's not money that matters right now, right? It's future money. So as long as you remember that, for me, this is the big time in the market beats timing the market, every time. That's the key. I'd love to hear from you guys a little bit on this here. Who wants to go first? Rachel?
Oh, I'll jump in. Yeah, I totally get this can be days like today can be a hard day for investors. I was getting notifications all day today about my portfolio. I happen to be very much invested in I'd say about half my portfolio are high growth stocks. Some of those stocks are tech. And then I kind of counterbalance those with quite a few slower growth healthcare companies. But all that to say is companies I'm invested, like Shopify, Etsy, for example, those were all down in a pretty big way today. For me personally, I do not check my portfolio every day. I do get notifications. I may or may not look at them because for me, I am not personally concerned by day-to-day movements. I focus on months, but more specifically over years. So I will look at a stock, for example, like Shopify, let's say, that had a bit of a rough day today. And, it's no fun. I don't love that when you feel like, oh, well, today I lost money. But the thing is, unless you are planning on cashing that money out, or if you were to cash that money out because you had kind of a moment of panic, you haven't actually lost any money. It's a temporary decline that can easily be regained the next day or the next week, or a little bit after. But you look over the long haul. So over the past year alone, Shopify has gained more than 60%. I'm personally very happy with those returns. So for me, I try to not think of day-to-day movements as I lost money, because when it's companies that I believe in and I think have a really great long-term runway of growth, and I'm not planning on, cashing out of those companies, I'm pretty confident that that'll come back up and then continue to grow in the years ahead. That's kind of my mindset about that. Um, Seriously though, not checking your portfolio every day can be great if you tend to be a little more nervous on those day-to-day movements of the market, which is totally understandable. Maybe limit how often you check your portfolio. Things are especially volatile right now. A lot of days we've seen kind of market overreactions. I know we've talked about that on this show a lot during earnings season. You'd have a stock that reported pretty great earnings, and then the stock plunges and, after hours trading. So I think understanding that we're kind of dealing with a new investment landscape in some ways, but over the long haul, these kind of companies, I'm very confident in their ability to grow.
Toby.
Yeah, it's a tough day. Days like this can be tough. I don't even know where my portfolio ended up. I remember though, this is kind of what you were alluding to, Jason. I remember seeing a bunch of comments on Twitter about how awful today was and how many stocks were down so much. And then I looked at CNBC's website and saw the S&P and the Dow hitting all-time highs. This was earlier today, before the reversal at the end of the day. And it occurs to me that it's not always useful or instructive to look at the indices at a time like this, even though they give you a nice broad overview, because when you're dealing with it, like, what matters is what your portfolio is doing, right? It doesn't necessarily matter what the market's doing. And there can be a disconnect, and sometimes that disconnect is hard to deal with. And I think one way you deal with that is you look at the relative performance over the course of the year, over the course of 5 years. Are you beating the market over the course of the year, over the course of 5 years? If so, then the price of that might be a little bit of underperformance on days like this. If you're going to be in those growth stocks, so if you're going to get you those market beating opportunities, you're going to have some market losing days like this too. And that kind of helps you set that mindset, right? Like, yes, I'm underperforming in a big way maybe today, but that's the price of my overall outperformance over my investing career. And if you're not outperforming over a long time period, maybe you reassess and adjust your strategy, right? And the other thing that you mentioned, Jason, right? You were talking about how you were, you're investing for retirement for a couple decades away. I feel like your portfolio, if you did nothing, is going to be higher, right? 20 years from now. I think that's probably true. It's not guaranteed, but I feel like that's probably true. For everyone who's suffering a loss today, whether it be 2% or 5%. I also suspect, again, not guaranteed, but if you're following those foolish guidelines of get yourself 20, 25 companies in a well-diversified portfolio, make sure you've got a little bit of cash, make sure you're not too concentrated in one position. If you're following those broad portfolio construction principles, I also suspect that 20 years from now, your portfolio is going to be higher than it is today. And I think that's what we got to remember. That's what we set our mindset on. That's what we focus on, that where am I going to be when I need the money, not where am I going to be, tomorrow morning.
If a stock, and I want to preface this. All right. So this might be a little controversial, kind of bold to say before we get back to our other topics of the day. No, I'm not even going to preface it based on portfolio size. I don't think it matters. If a single stock makes up 5% of your portfolio and you have never read the company's annual report, you're doing it wrong. Spend 10 times, I tweeted this, spend 10 times more time reading company filings, whether it's the quarterly report, the 10K, the annual report, the proxy, where you can find out how much inside investors and management own of the company that they run. And they're reading the 10K of their competitors. If you're not doing that, you're selling yourself short. I have no financial training. Rachel, I don't know. You have legal training. You don't think you have financial training. Toby, you're an attorney. You don't have specific financial training, I don't believe either. A lot of folks are self-taught how to do this. Anybody can read a 10K. Anybody can do it. Invest in understanding what you own. That is the most powerful thing you can do to inoculate yourself against the disease of freaking out when the market is down on days like this. That is the most powerful thing you can do. If a company makes up, I'm gonna say it again, if a company makes up 5% or more of your portfolio and you've never read the 10K, you're doing yourself a major disservice, because I tell you, reading those annual reports, take an hour and do it, do it. You're going to find conviction, or you're going to find out that you own a company that you own too much of, or you should know, right? I think it's amazingly powerful.